welcome everyone. Today we are doing chapter 10. And without any waste of time, my name is Kenneth and you can find us on Facebook page at External Auditing 2017, or you can also locate us on Google Classroom using the code CBPDFLW. So without any waste of time, I'll be doing chapter 10. So let's get to the business of the day. Today's topic is chapter 10, revenue and receipt cycle. I know most of the people, they struggle with cycles, not only this one, all of the cycle. But if you can learn how to study cycles and how to answer the questions, I think you will realize that cycles, in fact, they're very nice. It's a very nice part of auditing. You are actually doing the audit, so it's very nice. The first thing that I want us to look at is the documents that are being used in the cycle. If you can remember, one of the semester tests that they included, there was a question that needed you to mention the documents that are being used in the cycle. So it's very important that you understand these documents. Although in the textbook they only wrote them at the part of manual side, they also apply to computer side of the cycle. So you don't only get these documents in the manual side, but you also get them in the computerized side. You must know that when you are saying computerized cycle, you are not saying that the manual part is completely off. Normally the manual side and the computerized side, they work hand in hand. It's a combination of the two. So let's look at the first documents that are used. The first document that is used is called customer order. Customer order, it's the customer's instruction as to what goods are required. When a customer places an order, we use what we call a customer order. The second one, internal sales order. An internal sales order is a document compiled by company's own sales order clerk, which records the goods ordered by the customer. It is used for sale authorization and as a basis for creating the packing slip, meaning that immediately after taking the order from the customer using a customer order is going to be turned into an internal sales order that is later going to be used or converted into a packing slip. Now, what is a packing slip? A packing slip, this document lists all the items which the customer has ordered. It is used to assist the personnel to pick the goods needed to fill the order from the store so that they can be dispatched to the customer. Normally, I tell people that as much as it's important to know these documents, you must also know in which functions in the revenue and receipt cycle are used. And we know that a packing slip, we use it in the warehouse function. Number 4, invoice. Invoice is a document which is sent to the customer to notify them of the quantity and the price of goods sold to them, the total amount of the sale, discount, and the VAT. Number 5, delivery note. This document details the date, description, quantity of the goods dispatched to the customer and is signed by the customer to acknowledge the receipt of the goods, meaning that if a customer hasn't signed a delivery note, we can assume that the risk and rewards and ownership of that goods is still with the company. That's why I also say it is very important to look at ISA 12 in terms of ownership. Here they say that if a customer hasn't acknowledged the goods, it means that the risk and rewards and ownership of those goods, they are still with the company and not with the customer. Number 6, statement. It's a summary of all transactions for a period, usually a month, sent by a company to the customer. Number 7, credit application form. This document is filled in by a prospective customer so that the customer's credit worthiness can be evaluated. Guys, there's a big difference between a customer and a prospective customer. Same with being a student and a prospective student. A prospective customer, we are talking about a potential client or a potential customer. Here we are saying that if you want to become a customer, let's say of Markham, and you want to buy on credit, the first thing that you're going to do, you're going to fill in the credit application form. At that point, you are still a prospective customer. Once your application form is being approved, you will become a full customer. I hope you understand the two. Then a receipt we say the receipt records detail of payments received from customers, remittance advice, a document sent by the customer with their payment to indicate precisely which invoice are being paid, where payment is made directly into the company's bank account by direct deposit or EFT. The customer should send the remittance advice under a separate cover. Can I just please check something? Oh yes, we're good to go. Sometimes you're doing this thing and you don't know if you're recording or not, so it's safe to check. Number 10, remittance register, a list of payments received by the company. Number 11, back order note is a document which contains details of goods which should not be supplied when ordered by a customer, as there was no inventory available. Normally we use a back order note if a customer needs good or orders good and you get that those goods were out of stock. We will do a back order note so that when stock arrives, we can firstly deal with the customers that we have done back order note for them. Master file amendment form is a document used to record an amendment to the debtors master file. Log and variance reports. In a computerized system, the computer can be programmed to compile logs, variance reports, and so forth. A log is simply a record of activity which has taken place on the computer. I think we learned about logs in chapter 8 as well, so you can see how the combination of the two works. Functions within revenue and receipt cycles. Now this is the functions, this is the steps that you get in revenue and receipt cycle, and for a safety, these functions should be in a sequential form because this is how things work in revenue and receipt cycle. The first function, we have ordering department, we have warehouse department, we have dispatch department, we have invoicing department, we have receiving and recording payments, and we have credit management. Now let's look at ordering department. We're going to look at the activities, what happens when you take the order, and the controls that are put in place. Sometimes they can ask you to list or to discuss the activities and controls that you get under certain department, whether it's ordering department or warehouse department. Sometimes they can give you the controls as well as the functions that happen in revenue and receipt cycle or one of the other department, and your responsibility will be to be able to identify the risks as well as the weaknesses as well as the controls that you can put in place. So do not think this question is a static question. They can reverse it, or they can ask this question the other way around. Now the first one is accessing the system. Let's look at the controls when you access the system. We say that access will be restricted to an order clerk. Order clerk will have read and write access, meaning that order clerk is the only person who's going to be able to take the order and to change the order. Order clerk will have read access to the inventory and debtors master file, meaning that order clerk will only have read access only to inventory and debtors master file. He cannot change these master files. Ordering of goods will be restricted in this area. I think it makes sense why we say it will be restricted in this area. If you are not working in the ordering department and you are not part of the order clerk team, then there's no use for you taking the orders. Only order clerks are allowed to write and change the orders. Number 2, we say identify and authenticate the customer. Order clerk should request customer's account number, meaning that here we are assuming that we are taking the orders via a telephone. So that's why these things, the controls and activities are meant for someone who's taking orders through a telephone. The customer should confirm other information, meaning that once you have got the account number, the customer should give you other information. You must not give that information to the customer, but the customer should give it to you. Okay? Then if account number is a match to debtors master file, the system will automatically allocate a unique transaction number which will identify the sales. meaning you are going to create a unique reference number that you are going to use to trace the order of the customer. If the customer does not have an account, he will be referred to the credit management department, meaning that if he wants to open, he's calling and he wants to open an account, he will have to go through the credit application form, and the credit management will have to evaluate if they can give credit to this customer. If there is a hold on customer's account, the order clerk will refer the customer to a credit controller. When we say a hold, it means that sometimes you get that you haven't been paying for 2 months and you still want to buy, and they have blocked you from buying because you haven't been paying. They can put a hold on you, and the person who's only responsible to remove that hold is going to be the credit manager or the credit controller. Number 3, entering and confirming the detail of the order. Once the customer has been validated, the details of the order can be taken. To facilitate the complete and accurate entry of the order, the following programmed controls should be in place: screen formatting, mandatory fields, as well as minimum entry. All these program checks, they come from chapter 8. That's why it's very important that you first study chapter 8 before you can study any other cycle, so that you can familiarize yourself with all the computer audit and the controls that you find in the computer world. Then we have checking inventory availability. The order clerk will have read access to the inventory master file. If the goods are not available, the order will be placed on a back order file. Then the last one, checking credit worthiness, credit approval. The computer will compare the sale against the credit limit, meaning that if you are purchasing something and you get that you are only allowed to buy for 2,000, you want to buy something for 3,000, then your computer must first check your credit worthiness against your actual purchase. That's why all chapter 8 we talk about dependency check. A computer will perform what we call a dependency check. This is where now it's applicable. Now we go to warehouse dispatch. Obtaining the hard copy picking slip. Access to the internal sales order file will be restricted to admin clerk and the supervisor. Remember I said that after you have created a customer order, the customer order will later on be used or be converted into an internal sales order, which is called the ISO. Admin clerk will have read-only access, meaning that you cannot change what you see on the internal sales order file. The ISO file will be transferred to a picking slip. Once they are happy with it, they will convert the internal sales order file into a picking slip, and the picker will use it to pick the goods in the warehouse. Picking the goods picked are ticked off by the picker in the picking slip. The picker will sign the picking slip at the end to confirm that he has collected all the goods in the warehouse. Goods are moved from warehouse to a transaction area. Check the physical goods picked against the picking slip, and if there are mistakes, they will correct them. If you pick 10 items instead of 9 items, this is where we are going to correct all the grievances or discrepancies. Picking control clerk must sign the picking slip. Correcting and approving the picking slip. Right access is granted only to the picking control clerk. All quantity adjustments will be logged by the computer. The physical goods are moved to dispatch area. Suitable physical protection should be given to goods. Now we talk about invoice department. Final check of goods before creating the invoice. Dispatch controller will have read-only access. He will select the picking slip for the goods he wishes to check, identified by transaction number, which is your reference number. All the problems must be resolved by the picking control clerk. Creating the invoice, picking slip will be transferred into an invoice. You see how it develops. Now the picking slip is being converted into an invoice. A hard copy invoice will be printed. Approve option will be restricted to a dispatch control through his user profile. Goods are delivered to a customer. The customer must sign a delivery note, meaning that that's how he will acknowledge the ownership of the goods. These documents should be filed in the dispatch section in a numerical order. Sales order on the pending sales order file. These sales must be approved or rejected by the credit controller. Now we talk about receiving and recording payments from debtors. Accessing the bank account, the controls there. The bank will load its software onto a limited number of terminals at the company. Access to the company's bank account. The senior debtor clerk will need to enter a PIN and a password. This function will be linked to the senior debtor clerk user profile to enable him to initiate the download. Accessing the download bank statement on the system. The ability to access the bank statement will be restricted only to those who need to work with the bank statement. Now, if you can relate this to anything that we did in chapter 8, it will have to go with the access security policy under least privilege, where we are saying that you must only be given access to what you need in the system to perform your task. Here, that's what they are saying. They are saying that the ability to access the bank statement will be restricted only to those who need to work with the bank statement and no one else. Processing the receipt. Debtors should be regularly be reminded to clearly reference their EFT payments. Any receipt which cannot be matched to an invoice number on the system will be processed as a receipt suspense file, meaning that if you get a payment and you cannot match it to any invoice, we are going to place it under a receipt suspense file and will investigate where it belongs. Any receipt which has a matching reference number but the different amounts will be written to a receipt pending file. Now you should see the difference here. A receipt pending file, it is when the reference number matches but the amounts do not match. Sometimes the amounts do not match because we have given the customer a discount, or the customer is paying half, is not paying the whole amount. Credit management, granting of credit terms and limits. What are the controls? We say that the credit application must be submitted. The company should have a guide for credit terms, for example 30 days or 60 days. Adding the new customer to debtors master file. Controls on master file amendments will apply. Approving sales order on sales order pending file. The authority to approve a sale will be restricted to the credit controller. Only approve the customer after discussing the matter. The credit controller will have read access to debtors account history. Approving discounts. Receipt pending file. The authority to approve an early settlement discount should be restricted to a credit controller. All discounts approved should be logged and a report should be generated. Now, what I'm saying to you is that even if after going through this video, I will still recommend that you read full notes on page 1037. So, on chapter 10, page 37, sorry about that. Please go through the book as the book talks or guides you through this cycle in full detail. Here we are just summarizing the important aspects of the chapter. Now, this is where people struggle a lot to say that what can be the risks in the ordering department and which controls can you apply. Now, if I were you, I will take caution, I will be alert of all these risks and internal controls, because this is not part of the book. This is something extra that I just added. So just make note of it, because it might come out, who knows. The risk, we say, order may be accepted from non-account holder, which may result in sales being made to customer who does not pay his account. Internal controls. The order clerk should check he approved customer list. The customer clerk should request a customer's account number. Order clerk should sign all the internal sales order to indicate performance of control activities. This will be isolation of responsibilities. Number 2, orders may not be acted upon timely or at all, could result in a loss of sales or customers' goodwill. All orders should be recorded on sequential numbers, numbered ISO. The order clerk should regularly sequence check the ISO and match it to delivery note to identify any orders that have not been acted upon. Inaccurate or incomplete order details may be recorded, may result in incorrect deliveries, returns, and customer dissatisfaction. Now, a customer order should be attached to internal sales order with second staff member to cross-check the details. Customer should provide order reference number, the order clerk to confirm all order details by reading order details back to the customer. Now, we are done with the cycle. We go into auditing the cycle. What you need to know? You need to know the following things. You need to know the risks at financial statement, account balance and transaction level. You need to know sales assertion, which are the assertions that come from your income statement. You need to know trade and receivable assertions, which come from your financial position statement. You need to know recognition of revenue, which is IS 18. You need to know fraud in the cycle, which we talk about the fraudulent financial reporting and misappropriation of assets. You need to know further audit procedures. You need to know substantive audit procedures. You need to know substantive testing of sales, debtors, and I will encourage you to read other procedures. Now let's look at what I just mentioned. Let me first start with the risk at financial statement, at account balance and transaction level. What do we mean by the risk at financial statement level? We mean that it can be a risk that is going to affect all our financial statement. For example, if you're going to have a financial manager who compiles the financial statement, and if it's someone who does not even know anything about accounting, what can you expect? Do you think that person even knows what is asset? So that's what we mean by the risk at financial statement, meaning that you can expect all the items in the financial statement to be incorrect or to have a risk. Account balance and transaction level. Here we are saying that sometimes you get that the financial statement as a whole, it does not have a problem, but a certain account can have a problem. Now, revenue and receipt cycle is a very interesting cycle. And the major component here is our debtors account, because people are buying on credit, and once they buy on a credit, we raise debtors account to say that this is how much they owe, this is how much we expect to receive. Now you must remember, debtors account, it's your non-current asset, meaning that it's going to have a major influence when you calculate the financial position of the company. It might even deceive the shareholders or the users of financial statement if it is not correctly dealt with. If it's overstated, then you get that the share price of the company might show a positive amount, where it's going to mislead the shareholders and the potential shareholders. So auditors are required to look at this item, especially. You will see in your exam, I think they're going to highlight it, because this is very crucial when you are working with revenue and receipt cycle, debtors account. They will ask you that what could be the risk with debtors account, or give us substantive audit procedures you are going to perform to ensure that the amounts in debtors account, they are genuine. Now, some of the things that you can do, you can perform a positive secularization or a negative secularization, but I always tell you that negative secularization is not that good, because it's a one-way communication, meaning that we send a customer letter to say that, do you acknowledge that you owe us 10,000? If you acknowledge that you owe 10,000, do not respond. If you do not acknowledge 10,000, respond. Now you get that a lot of customers lately, they are renting places and they are moving up and down. So if you're going to send a letter and the customer does not respond, what does it tell you? Are you going to assume that he agreed that he owes 10,000? So that is the the advantage or disadvantage. Sorry, that is the disadvantage of a negative secularization. So what will you do? You will perform a positive secularization. By performing a positive secularization, you are saying that you will send a letter to say that, do you confirm or do you agree that you owe 10,000? Please respond if you agree that you owe us 10,000, or if you do not agree that you owe us 10,000. So those are going to be some of the things that you have to look at. That's why I say that it's better to perform a positive secularization and not negative one. Let's look at transaction level. Transaction level, here you can get that the account balance is correct, but at transaction level you are going to have misstatements, meaning that you are going to have, maybe let's say you are going to have people that are working within the order department colluding to make an order and to raising a debt who does not even exist. In government we talk about ghost employees, and here we are going to talk about ghost debtors. You end up having a ghost debtor because they are raising a debt who does not even exist in the first place. So that can be a disadvantage at a transaction level. So we say no the sales assertion that come from income statement. Last time I said to you, please find a way of knowing these assertions by heart. I have created my own methods on how I can remember them. I always say for income statement, it's triple COA and the last one being P. The first C, completeness. The second one, cutoff. Third one, classification, occurrence, accuracy, as well as presentation and understandability. Then the assertions for financial position, we talk about CVREP as well. We talk about completeness. We talk about rights and obligation. We talk about valuation and allocation. We talk about presentation and understandability. Now let me go to the further audit procedures, substantive testing of sales, as well as debtors. Let me look at further audit procedures. Well, further audit procedures, it is the whole auditing that you are performing. If you can remember, the first thing that we are doing, we will perform a risk assessment. And based on our risk assessment, it will tell us and it will identify if we need to perform internal controls first to check if they were working before we can go to our substantive procedures. You get that sometimes that the controls themselves, they are not working. If the controls are not working, it means you will have to test the controls before you can go to substantive procedures. But if you can come to a conclusion that the controls were working and you can rely on those controls, then there is no need for you to perform or to test the controls. But you must always, doesn't matter if the controls are working, you must always perform the substantive procedures. Now, under substantive procedures, we have two things. We perform analytical procedures and as well as test of detail. Now, I always tell you that when you are dealing with those two, when you are dealing with analytical procedures, it means you are just going to analyze, you are going to compare information, you are going to compare non-financial information with financial information, you are going to calculate your inventory turnovers, compare the information to say last year this is how the profit we made 10 million, this year we made 50 million. Why that big difference? Is there any fraud taking place, or is there any ghost debtors that we didn't identify? When you perform test of details, now that's when we are going we are going through each and every invoice, each and every source document. Now I always say when you do a test of procedures, a test of detail, make sure that in your substantive procedures you mention a document. You must at least mention a document that you're going to check or that you're going to inspect. You must be able to mention an assertion that you are testing. you must also be able to mention a toolbox that you are using. It's either you are inspecting, or you are inquiring, or you are confirming with third parties. So please also check the toolbox. I didn't mention them here, but they are there in the book. We have 7 toolbox. We have inquiry, we have inspection, we have third party confirmation, we have analytical procedures, we have reperformance, we have recalculation, and we have analytical procedures. Now, with analytical procedures, we do not perform analytical procedures in the substantive procedures. We only perform analytical procedures when we want to, we don't perform analytical procedures in the testing of controls. Take note, we don't perform analytical procedures when we test the controls. So, auditing the cycle. According to ISA 315, the auditor is required to identify and assess the risk of material misstatement at both financial statement level, account balance, and transaction level. Already I have explained to you the difference between financial statement level and account balance and transaction level. At financial statement level, if there is incentive for the directors to manipulate the financial statement, they may do so by understating or overstating profits by manipulating sales. For example, creating fictitious sales to related parties, manipulating cutoff at year end. At account balance, there may be an identified risk that the account receivable balance will be overstated because of inadequate allowance for bad debts. At transaction level, risk assessment procedures may have revealed that the controls over cash sales are totally inadequate, or that sales invoices are raised before the goods ordered by the customer have even been picked from the warehouse. Assertions on purchase, transaction, and sale. We have cut-off, classification, completeness, accuracy, occurrence, and presentation. Assertions on account balance. We have completeness, valuation, allocation, and accuracy, rights, existence, and presentation. Fraud in the cycle. We have fraudulent financial reporting as well as misappropriation of assets. Fraudulent financial reporting results in manipulation and intentional misleading of financial statement by creating fictitious sales, understating the bad debt allowance, manipulating the recognition of revenue from sales. Misappropriation of assets results in stealing and defrauding the company. Theft of cash from the cash sales, theft of payments received from debtors, theft of goods at the dispatch stage, not paying over VAT on sales, making invalid adjustment to debtors account. So you must know the two, that we have misleading as well as theft. So this is the end of our slideshow. From here we are going to do questions on chapter 10. So yeah, let's go straight to the questions. Okay, now we are doing the questions, and we're gonna start with my favorite ones. We're gonna do question 8.8 from graded question, then we do one previous exam paper, as exit exam 2015. Okay, we're gonna do part B, 8.8 part B. So let me scroll down. Yep, this is where we are starting here. Yeah, I think we are starting here. Sweet. They say that you are in charge of the audit of cash and bank at Beach Break Limited for the financial year end February 2017. During the interim audit conducted during late December 2016, you had audited the bank reconciliation at the 31st November and found it to be correct. All payments to trade creditors and all other payments are over 20,000 made by Beach Break Limited are carried out by EFT. Amount of 20,000 or less are paid by check. Now the very important thing that we must look at is the financial year end, which is year end February 2017. before we can start, let me read the requirements. They say, describe the audit procedures you would conduct on a bank reconciliation of Beach Break Limited at 28 February 2017. Okay, now let's go back. During March, as part of your year-end procedure, you are preparing to audit the bank reconciliation prepared by Otis Reading and presented below. Bank reconciliation at 28 February 2017, Beach Break Pty Limited. I think this is what we need. They say bank reconciliation balance as per cash book 127. Then we are given outstanding checks. You are given checks from October until February. Then you have one EFT note. Then you are also given bank charges and balances per bank statement on 28 February. Now we need to reconcile the audit procedures that you are going to perform. So for the sake of this one, I am just going to write the audit procedures that you can perform right here. I think it will be fine if I can just do the procedures here. So let me just put a smaller note. Yep, if it works. Yes. So let's write our procedures. I'll just say one. The first procedure will be to reperform bank reconciliation. See, reperform bank reconciliation. Number two, clear all. I think the other thing that we should look at, we should clear all outstanding checks as on 30th November. Clear all outstanding checks as on 30th November. Clear all. You know, your procedures might be different from mine, but they should at least be similar. Clear all outstanding checks as on November. That's the second one. The third one that the only procedure that I'm going to perform, I am going to trace all entries from the cash book for December. I'm going to trace all the entries from the cash book for December. The fourth one that I'm going to do, I'm going to inspect the bank statement and cash book for any unmatched items. So I'm going to inspect the bank statement and the cash book for any unmatched items. The other one that I can perform, I'm going to confirm the balance per cash book as well as confirm the balance per bank statements. So I'm going to confirm the balance per cash book amount of the cash book is I'm going to confirm this amount of 127261, 30, and number 6 I'm going to confirm again the balance per bank statement, per bank statement at 222873, comma 60. Yes, comma 60. Then these are the procedures that I'm going to perform. Let's look at the audit procedures that I'm going to perform. I'm going to reperform the bank reconciliation. I'm going to make sure that I clear all the outstanding checks as on 30th November. I'm going to trace all the entries from the cash book for December. I'm going to inspect the bank statement and the cash book for any unmatched items. I'm going to confirm the balance per cash book at 127, as well as confirm the balance per bank statement at 222. Now normally what you can get as unmatched items, it's your bank charges. Normally your bank charges are not shown on your cash books, but they're only shown on bank statement. Those are some of the things that you can get around. Okay, so without waste of time, let's do I'm done with this one. I think you guys can see it. If you just want the answers, you click here, and that's all the answers that I wrote for this question. So we're gonna do question, which question is this? Question 2 for 2015 November main exam. I'm going to start with the requirements, because you get that some of these requirements you can even answer without having to even read the scenario. That's what really happens sometimes. Okay, let me start. We're going to do question 2. Before I read question 2, let me just read the requirements first. They say list 4 risks that are related to appear in each of the departments discussed above if you assume that none of the document controls are in place. Number 2, describe analytical procedures you would perform when auditing revenue total. Number 3, draft the test of detailed procedures to test the occurrence of revenue total. So let's just read question 2. Let me go up. Yep, question 2 starts here. Now they say that you are part of the audit team of Books for Africa Limited for the year ended 31st October 2014, a medium-sized company which sells books to tertiary institutions. Prior year audit file. The following information regarding the revenue and receipt cycle is documented in the prior year audit file of Books for Africa. Sales are only made on credit to approved tertiary institutions. Orders are placed on the website online of Books for Africa by tertiary institutions, different faculties. Log reports are available after each activity performed on the information system. Books for Africa tracks are used to deliver all the orders to tertiary institutions. Tertiary institutions pay via electronic funds. Okay, not a problem. Let me go down. Current year audit file. The following controls regarding the revenue and receipt cycle have been documented in the order file of the current year audit of Books for Africa. On opening ordering department, on opening the online ordering screen, the tertiary institution must indicate their account number so that the customer can be verified. An account number consists of the institution's name, TUT faculty name, and campus location. If the account number is matched to the debtors master file, the system will automatically allocate a unique transaction number which will identify the sales order as it progresses through the system. New customers are only added to the debtors master file after their information on application form and creditworthiness have been verified by verification agency. Only once the customer has been validated can the details of the order be taken. Yeah, we are done with that one. Those are the controls in place. Controls for warehouse and dispatch department. Before the picked books are moved to the dispatch area, the warehouse clerk compare goods picked to the picking slip and authorizes the picking slip online by forwarding it to the dispatch manager. The dispatch manager matches the on-screen picking slip with the books received from the warehouse, and once satisfied, he selects the approve confirm option and the screen will come up formatted as an invoice. A hard copy invoice and a delivery note is printed for inclusion with the goods. Once the invoice is printed, a real-time processing takes place on a system. For example, the debtors master file, sales account, and inventory master file is updated simultaneously. Once the invoice is printed, real-time processing takes place on the system. The debtors master file, sales account, and inventory master file is updated simultaneously. A delivery label indicating the delivery address is printed to the stack of the box of the books. On delivery, a representative of the faculty must sign both copies of delivery note and retain a copy and retain the other copy with the truck driver. An opening picking slip block is printed and followed up to determine whether the goods have been picked. An unconfirmed picking slip block is printed and reviewed for picking slips not approved or confirmed to invoices. Debtors department, the bank software is loaded onto the terminal of the financial director, the financial manager, and the senior debtor clerk only. To the bank account and PIN password is required. The bank statement is downloaded every day and receipts from debtors are allocated to the individual's debtors. Tertiary institutions are reminded on the invoice to use the invoice number as reference for allocating payment. Below is the revenue figure for the year under review. We have the year for 2014 and 15. Now you are required to list, let's read. You are required to list any 4 risks that are likely to appear in each of the departments discussed above if you assume that none of the document controls are in place. Score now you want to give risk if we are assuming that the controls that we just read were not there. What were going to be the risk for each department? So I'm going to make 3 notes. The first one is going to be for ordering department. My answer for that one, let me just write for ordering department. Number 1, goods can be sold to a non-account holder. We know that one. Goods can be sold to non-account holder. Number 2, goods can be sold to a customer. Goods can be sold to a customer that is not on a good standing. Goods can be sold to a customer that is not on a good standing, meaning maybe this is a customer who does not pay his credit or his debt. Let's just say a customer who does not pay his debts. Number 3, incorrect goods can be ordered. Let's write incorrect goods can be ordered. Incorrect goods can be ordered. Number 4. Since these guys they are operating an internet business where you place orders on the internet. So the risk is that if the network is down, this means that the operations of the business will be negatively affected. So you can say if the internet if the internet is down, it will negatively affect the operation of the business. Yebo. They just say 4 each. They say list 4 for 3 departments. Look at the marker location, 4 for each. So I think we have done justice to this one. Yep, they are there. Let me do another sticky note for warehouse. Let me just write warehouse and dispatch. Warehouse and dispatch department. Number 1, what can happen in the warehouse? I think incorrect goods can be picked. What else can happen? Incorrect number of quantity can be picked. Incorrect number of quantity can be picked. What else? Number 3, unauthorized picking slip can be created. Unauthorized picking slip can be created. Number 4, unauthorized picking slip can be picked. Number 4, we can say goods can be stolen at the dispatch area. Goods can be stolen at the dispatch area. Goods can be stolen at the dispatch area. Yep, so therefore, let me just place it nicely here. Let me look at the first one. The first one I said goods can be sold to non-account holder. Goods can be sold to a customer that is not on a good standing, a customer who does not pay his debts. Incorrect goods can be ordered. If the internet is down, it will negatively affect the operations of the business. What else can I add here? Of the business, thus influencing the customer's goodwill. Yep. Second one, warehouse and dispatch. We said incorrect goods can be picked. Incorrect number of quantity can be picked. Instead of picking 9, we pick 10. Unauthorized picking slip can be created. Goods can be stolen at the dispatch area. Now the other one that we should mention, it's for debtors department, and I'm not going to do that one for the sake of this is just an example on how you're supposed to answer. So let's just go to number 2. They say describe analytical procedures you would perform when auditing the revenue total. Describe analytical procedures you would perform when auditing the revenue total. 3 analytical procedures that you can perform. I think the first one that I can perform, I will calculate. Let me just write one. I will calculate the profit margin for both years. I will calculate the profit margin for both years. You must remember, when we perform analytical procedures, we are just comparing the two. We are not doing the test of detail here. Calculate profit margin for both years. To inspect if the increase, let me just say, to inspect if the increase in revenue is suspicious. Because I mean, like, we want to know that if these guys couldn't make 13 million last year, what made them to make 13 million this year? So these are some of the things that you're going to do. You're going to calculate profit margin for both years to inspect if the increase in revenue is suspicious. And they must give us answers in terms of how did they move from 10,000 to 13,000. What changed? Number 2, what I can also perform, I'm going to compare debtors account with sales made on credit. I'm going to compare debtors account with sales made on credit. This is to say that we want to make sure that all the sale that was made on credit, it was made to existing debtors. You don't get that they say there was a sale that was made on credit, but if you check your debtors account, amounts do not respond, then we will know if something is suspicious. Number 3, what else can we do? I think number 3, we can compare a statement of actual goods sold with an inventory sheet to inspect if goods sold actually exist in the inventory sheet. We can compare a statement. We're going to compare a statement of actual goods sold with the inventory sheet. With the inventory sheet. With the inventory sheet. To inspect if goods sold actually exist in the inventory sheet. Those are 3 analytical procedures that I'm going to perform. I am going to calculate profit margin for both years to inspect if the increase in revenue is suspicious. Compare debtors account with sales made on credit. Compare statement of actual goods sold with the inventory sheet to inspect if goods sold actually exist in the inventory sheet. Okay, let me just put it here. The last one, they say draft the test of detail. Draft the test of detail procedures to test the occurrence of revenue total. Okay, let's draft test of detail to test the occurrence of the revenue total. At my sticky note. Number 1, I'm going to perform a positive data secularization to confirm if the sale actually occurred. Perform a positive data secularization to confirm if the sale actually occurred. If the sale actually occurred. What's wrong with my secularization? Okay, it's fine. If it actually occurred, yes. Number 2, what can I do as well? I'm going to select a sample of transactions recorded in the revenue account and agree it to the invoice. I'm going to select the sample of transactions recorded in the revenue account and compare and agree it to the invoice, or compare it to the invoice. Select a sample of transaction recorded and agree it to the invoice. Number 3, I'm going to confirm the details of the customer on the master file amendment form, as well as check the credit terms. Details on the master file amendment form to inspect credit terms. Number 4, I think they want 5. Number 4, I can also follow invoices and bank statement to ensure that customers who exceeded credit terms and are not paying have been considered when calculating provisions for bad debt. So I can also write that as my procedures to say I can follow invoices, and bank statement and bank statement to ensure that customers who exceeded credit terms and are not paying have been considered when calculating provisions for bad debt, when calculating provisions for bad debt. To save time, I'm not going to do all of this, but at least I did manage to do this question. Let's review my answers again. The question was saying, draft the test of detail procedures to test the occurrence of revenue. So what I said here is that I'm going to perform a positive data secularization to confirm if the sale actually occurred. That's the first one. Number 2, I'm going to select the sample of transactions recorded in the revenue and agree to the invoice. Number 3, I'm going to confirm details on the customer on the master file amendment form to inspect credit terms. Number 4, I'm going to follow invoices and bank statements to ensure that customers who exceeded credit terms and are not paying have been considered when calculating provisions for bad debts. Then that's it. If this question was, let me just see, the question is 20 marks, you will have your full 20 marks. How nice is that? So we are done with our tutorial for chapter 10. Let me just look question 3. I'm not doing it, I'm just looking at it. They say explain the purpose of the following documents which are used in the acquisition and payment cycle. In addition to the purpose, indicate the function where the document is used, and 2 risks relating to the function: remittance advice, delivery note, and credit note. So as you can see, they also ask you to give us the functions of this document. So it is important that you know the documents as well as you know their meaning, their functions. That's why I took some time and I explained to you the documents that we use in the revenue and the receipt cycle. It is because sometimes they do ask you. And look, it's an easy 11 mark, 12 marks. If you know this thing, you already you're celebrating alone. So thank you for watching. Continue watching. I will also try to continue doing the tutorial, although it takes most of my time, but I will try my best. So yes, thank you for watching, and I wish you all the best with the exams.